serious students of the market across the globe. This is Jeff Killian for the Vector Traders Consortium. Check us on the time, 9:25 and 48 seconds a.m. Again, Eastern Standard on January 18th, 2022. This morning's pre-market analysis, pre-market open equity session analysis is part 3 now, 3 different segments beginning 3 weeks ago, and then last week, and now again today for 1/18/2022. Again, we're using ES, near contract month. That's the S&P 500 E-mini futures. Near contract month is 3/22. So at this point, we have a continuation for the market moving to the downside. Our special alert that was laid out again 3 weeks ago and then updated last week, and then again this third portion of that overall special alert has the market trading down right now below 4613 before the market open. Again, now 9:26 a.m. Eastern Standard. The levels to the downside for end of day price profit targets are located here. The close of 1220, the close of 12.1, and then again with no downside resistance here because of the uniformity under low volume conditions will be the close, the up close of 1014. Now the interesting part about the most recent price action is this is the overnight, and right now 4613 is the approximate level for where this market is trading. So look at the increase in volume here that came in, right? And look at the up move, and now look at the down move. Again, we are on an additional probe through this level here, again, drawn from the open of 1220. That number is 4612. This is a critical level, traders. For anyone that's been around the block or brand new, this is a critical level because we're on an additional probe after this day here and looking for these longer term price profit targets to the downside again on an end of day basis. So if you're trading stocks, index funds, ETFs, whatever, this is good intel to have. And the S&P 500 mini futures market is the preferred vehicle to do all of our analysis before market open because of the model that it provides for the indicators that we're going to get into real quick here. Now, we don't have a lot of time, so let's go right into the money flow index. After the negative divergence here is compared to the prices, okay, a small up move and then straight down with no look back, indicating that the short-term money is more or less completely out of this market. Looking at the CMF here, a minor uptick. This trend line violation in play, but this market is not closed, or better said, for settlement prices on the current session. But look at the relative comparison of the values here. We are in a more or less a net neutral state, looking to get above this peak and above this on a closing basis to even consider the possibility of some long conclusion out of this indicator in isolation. Chicken oscillator here down after the negative divergence. Again, looking at the SMI, the fastest indicator in the stable, solely pegged to price action. Look at this, the negative divergence falls off, closes below the overbought territory, and again, through internal downside support here with more downward movement. I think the interesting conclusion out of this indicator is how it does not trade up as compared to the price action, and then again moves down to lead the price action to the downside. The MACD, last but not least, no look back here at all. And disparity, the difference between the MACD and the signal line continues to widen. So where are we at today according to the VTC traders smart money bias market trading call, finding, tracking, and trading with these largest institutions who can and do move prices from one level to another? Concluding with the volume chart, we are at now short level 7. Depending what happens right after the market opens in a few seconds, we will either have volume come in to push the prices up, give us a shakeout, and then continue to move down, or a possibility of sideways movement up and until the continued decision gets made to either continue to push these prices down or move them back up. Right now, The conclusion is on our end, we are short level 7, and that is a strong downside bias. Thank you for all of you being with us today. This is Jeff Killian for the VTC. We are out. We'll pick it up on the next vid. Be careful out there. The key to longevity in trading as a professional, as I always say, is risk mitigation.